All right, all right. Welcome to Chart Work with Carlos. It is Wednesday. It's the middle of the week. I just wanted to, start off with that song, Ajuna Deep, Above and Beyond for my trans people out there. You know what's up. So yeah, I just want to start off this call with some energy, with some good vibes. It is hump day. A lot of people, people working 9 to 5 jobs, people working, you know, uh, it's the middle of the week. Usually, typically, people are stressed out, people are, sluggish to get into work and clocking in. And, this is my work right here, right? I'm clocking in for my dreams, I'm clocking in for myself. And there's no better feeling than, being your own boss, right? So I'm so grateful and so honored to be able to host these calls and use this platform to spread the knowledge of trading and investing and financial literacy. We are all here to grow together, to elevate together. And so this skill set has impacted my life. And I just can't stress it enough how grateful I am with this skill set, and I just want to be able to, share the knowledge, share the experiences with you guys, and share this energy, So I'm feeling really good this morning. I'm feeling good, all praise to God. He woke me up another day. We are here, we are breathing, we are alive, we are healthy, and we have the gift of learning, right? To learn new information, to learn this the skill set to to take us to the next level, right? And to provide for ourselves, to provide for our families, and to impact the people around us, and use this as one of the vehicles to accomplish your financial goals, right? So, but yeah, let's go ahead and get this started. Let's go ahead and do some chart work here. I'm looking at gold right now. Gold shot up this morning, and there is no news today. There's actually no news except President Trump is speaking. He spoke this morning, actually. It just about an hour ago. He spoke, and really there was no, activity when he spoke. It's a orange folder, so it's a mild impact news. But however, tomorrow we do have PPI, we have Producer Price Index tomorrow, and unemployment claims like we do every Thursday. So Producer Price Index measures the change in the price of finished goods and services sold by producers. It's a leading indicator of consumer inflation. When producers charge more for goods and services, the higher costs are usually passed on to the consumer. Now, actually, yesterday we had CPI. So CPI came out the same as previously. It came out to 2.7%. So it actually the dollar actually shot up. And let me see here. Actually, I might be wrong. Let me see. 530 is shot down. Yep, it's shot down here. So it weakened the dollar, and that's actually, correct. It weakened the dollar, when it's 2.7, just like before, and there is no increase, or there's no increase on the inflation. It just remains steady at around the same level. It still weakened the dollar, so it impacted the price of the dollar, and it shot down, right? So I actually have it marked up here. We are in between a stable market right now. So above 105 is a strong dollar, and below 95 is a weaker dollar, right? So we are in between this range of between 105 and 95 USD. So when we have the dollar around these price levels, it is a stable market. Although the overall picture of the dollar, it is weakening, it is losing value over time. It's been losing value, for decades and decades and decades. Oops, sorry about that. It's been losing value for decades, and we can go back and see it here, right? Since the creation of the Federal Reserve, right? And when the dollar was taken off, uh, what is not backed by gold anymore, so it was taken off the gold standard. Now money just became debt, and they continued to print more money, thinking that that was going to fix the problem to our national debt, right? To our U.S. National debt by printing more money. But that is not the solution, right? The solution is not printing more money because the more money you print, that it's going to cause inflation, it's going to cause more debt, and it's going to be a chaos, right? So it's been losing value over time, as you guys can see here in the chart. We were looking at the monthly chart. It's been losing value, right? The highest we've gone throughout history was at 165, and it dropped all the way down. Now it's at $97, right? And this is the index. So it is an index for the US dollar as an indicator, as a way to see, the dominance of the dollar, um, and also the amount where uh, the dollar, it's just used as a standard, right? So you can use this US dollar index to predict future, or actually use it as data to as an indicator to support your other instruments when you do your trading. It's like the gold, right? Like gold, like Euro USD, USDJPY, any pairs that contain the US dollar, it will also impact. It's going to be a inverse or a direct relationship amongst each other. And the more you study this, the more you backtest it, you'll notice the patterns. Now, with CPI news yesterday, it remained at 2.7. So, it actually dropped, right? It dropped in price. You guys can see here. So it's weakening the dollar, and the more it heads towards when it heads towards 95 and it's below 95, the dollar will become weak. Okay, so and that means that when dollar becomes weak, it's going to benefit all the asset pairs. It's going to benefit gold. It's going to benefit, crypto, right? So it's going to be interesting what's going to happen this September when the Feds are predicting that, more than likely they're going to cut down rates. So when they cut rates, it's going to weaken the dollar. It's going to push crypto up. It's going to push all the assets up. Gold is going to push up, right? So when the dollar is weak, you know, it, um, it's going to influence uh, inflation. So inflation, it's going to go, with the Fed rate, right? The whole purpose of the Fed rate cut, the reason why they're not cutting it right now is because they're worried about the inflation not meeting their target goal, which is at 2%, right? Their 2% is their target goal for the Federal Reserve, right? For inflation. So right now it's above our expectation target. It's above 2%. Right now, inflation is at 2.6. The last time I checked, it's at 2.6, 2.7. So it's above our target rate. Now, when we cut the rates, when the Federal Reserve decides to cut the rate, it is gonna cause inflation. It may let me see here. Actually, I have it. It may go up, right? Inflation, there's worries about inflation, and especially with tariffs and all that, it's gonna influence the dollar. And let me see here. I can actually show you guys here. And I will be sharing this information on my Telegram as well as soon as I have it all finalized, and I have all the data here. As soon as I have this finalized, I'll definitely post it in my Telegram channel. So for those who are not subscribed to my Telegram channel, I highly recommend you guys subscribe and check it out, because I'll be uploading books, resources, useful information for you guys to use. So I created an economic impact cheat sheet, right? So because there's a lot of numbers, there's a lot of information, especially for my fundamental traders, for do, for doing fundamental analysis, you got to know these numbers, right? So I'm doing my best to memorize all these numbers, like memorize like okay, what's going to be the difference, the exact impact, the exact reaction of the market. So just like I was saying, when the Fed decides to cut rates, right? So let's say they're going to cut it down by 25 basis points or fifty basis points. So when they cut rates, it's going to push down the dollar, right? The outcome, the market reaction is going to push down the dollar. It's going to push crypto up. It's going to push stocks up. It's going to push gold up, right? So these are the outcomes, right? And however, it's not guaranteed. Just keep that in mind. It's not guaranteed because sometimes I do notice gold and the US dollar going in the same direction when there's certain news, right? So uh, just keep in mind that these outcomes are not guaranteed. Okay. Now, this is just a tool for you to use as a resource. All right. This is just for resource. This is just for reference so that way you guys can study and come back to this and um and learn. Now, like I said, federal funds rate, when they decide to cut it, when they decide to cut it, it's going to influence the dollar. It's going to push dollar down. It's going to push all the asset pairs up. And when they hike the Fed rate, or when it's a hawkish pause, right, it's going to influence the dollar. It's going to push the dollar up. It's going to push down crypto. It's going to push down stocks and gold. So that is that. Now with CPI, there is no increase on inflation. It just remained at 2.7. It remained at the same level. So there is no, the dollar didn't go up, right? It pushed down, right? It actually pushed down. So, let me see, when the dollar pushed down on yesterday's CPI news, with gold, it resulted a push to the upside, I believe. Let me go back here to 5. Yep, here it goes right here. It pushed the gold to the upside, right? This is the 530 candle. So you have a bullish candle there, right? This is a candle right here. This is the result of yesterday's CPI news on gold. So there was an inverse relationship. All right. So that's what happened when you study news, you'll see these differences, right? You'll see these market, correlations. Now let's go back. I don't know if I was sharing it. Was I sharing it? Oh, my bad, guys. So I was just showing you guys here, 530. It resulted this bullish candle right here on gold on yesterday's CPI's news. So I just showed you guys with the dollar, it resulted in a bearish candle, but with gold, it resulted in a bullish candle. So there was a inverse relationship, right? So, um, but that is that. And like I said, I'll be sharing that economic cheat sheet once I got it finalized. It'll have all the details, literally all the details from the bond yields to crypto to the Fed rates to unemployment claims to every important um, news data, news information will be listed on that table. Will be listed on that cheat sheet. All right, so today it's more about technicals. So this morning, I was actually looking at gold, and it broke above this this zone here, right? I had this marked up around 33.50, 33.45 area. This is my demand zone. So there's a lot of buyers holding here, a lot of buyers placing positions here, but also it was building up liquidity. So it was consolidating around this price range, right? It was building up liquidity, and now it finally decided to break above and liquidated all these traders, right? Placing these sales because there's people buying, selling, buying, selling, buying, selling. So people that sold, that placed their stop losses up here, right? And they're selling thinking that the market was going to push down, they actually got liquidated, right? Price pushed up, they got liquidated and hit their stop loss. Now, I did not trade or place any trades when the market was behaving this way, right? I do not place any trades when it's looking choppy like this, when, there's no break of structure. It was just, staying around this range. I wait when there's a break of structure, either above or below. So because I noticed that it was building up liquidity, it was very choppy. So I was waiting for a break to the upside. And once I saw that, right, once I saw a break move to the upside, now I was waiting for that retest. And I actually took a buy position here. However, um, it hit stop loss. I entered two trades. One hit break even, then I entered another trade and it hit my stop loss. So I only trade, when it hits stop loss twice, I'm done trading for the day, and I go back to studying and go back to, journaling and doing my trading journal and reflecting and seeing what I could have done better, and seeing, what happened, right? What and what ways I can improve, in my entries and my exits, and so definitely it's a learning lesson for me this morning. I'm still getting my feet wet. It's been a while since I placed an actual trade. And when you're back, right, you just wanna you're excited, right? I was so excited. But it's a learning lesson. So I'm here, like I said, I'm here learning with you guys, and the more I teach this, I'm actually learning at the same time. So it's a win-win for all of us. Anyways, I'll show you guys here what happened. Let me see here. So here the move was at 6:30 at New York Open, 6:30 Arizona time, which is 9:30 Eastern. That's when New York opens, the bell rings, right? Now there's like a move happening, at New York, right at New York Open, there's always a move happening. So it resulted in this bullish candle, and it actually came and broke above, right? Pre-New York session, during London session, it broke above and came back down to retest this price level, right? This support here at 33.55. It came back to retest 33.55, and every $5, it's a key level for gold. So every $5, every $10, every $25, right? Every quarter level or every $5, right? You can mark up every $5 on gold, and it's a key level. And for my scalp traders, for my people that like to, trade in minutes and hours, doing gold, definitely mark up these key levels because you can use them as support, as resistant levels. You can use them as entries. You can use them as stop loss prices or take profit prices. It all depends on where the market is going. What's your market execution is, if it's a sell or a buy order. Definitely marking up these price levels will help you because price tends to react. There's a price action that's happening around these specific price levels. And I can show you guys here, right? It reacted here at 33.55. And why? Because it was once a resistance, it broke above, came back down to retest. It was holding around that price, and it shot up again, right? It created resistance here and it shot down. You see 32.65, it reacted around this price, created a resistance, came back down to retest this this level again, this price, because when you look left, we have some activity here. And of course, it reacted around this level because we had some previous activity going on here. So when you look left to be right, right? So you look at past data to predict where price could potentially go in the future. Now, and that's exactly what happened. So when price broke above, it came back down to retest 33.55, right? And this is where, I could have entered here, right? But I was too late to the party. I actually entered around 33.65 because I saw these two bullish candles and the third candle resulted bullish as well. And I'm like, okay, it's going to continue up. So I entered at around 33.65, placed my stop loss at 33.60, and I was riding it all the way till 33.70, 33.75, 33.80. So it actually hit TP1 at 33.70, and then it came back down and it hit my stop loss at when I moved my stop loss to break even, it hit my stop loss at 33.65. And then I entered another trade. I entered right at 33.65. When it came back down for a correction, I re-entered at 33.65. I set my stop loss at 33.60. And then obviously it continued to go down and it pushed price to the downside and it hit my stop loss at 33.60 on my second attempt. All right. So, you know, when you win one trade, right? You hit TP1 in one trade, yet you still break even, right? Um, and uh, and yeah, and then you second attempt thinking that I was going to retest again at 32.65 for continuation up, but instead it pushed down and it hit my complete stop loss at 32.60, which is 50 pips that I was willing to risk. But it's a learning lesson and we'll do better next time, right? So this is what happened this morning. And, gold right now, it came back to retest 33.55 again, right? It came back down here, right? We had just like it happened before, we had some previous price action here. So it came back down to retest this support level at 32.55 is a strong support level. Why? Because it respected this price and it shot back up. It respected this price, it shot back up. It respected this price and it shot back up, right? So when you see this happening, right, when you see support, when you see price respecting this price level around 33.55, it is a support. It's a strong support area. It's a strong support price, right? And a demand, right? A demand is just an area. It's an area of buyers where there's an imbalance, right? This is an imbalance candle actually, and came back down to fill it up, right? So this right here actually was an imbalance candle at one point. It was an imbalance candle, and market came back down to fill this candle and it touched this demand zone where there's a demand of buyers, an area of interest. Okay. So that's how you can tell the difference between supply, demand, support, resistance, right? A lot of people get it confused. Um, Keep in mind that support, in this case, the support price is 33.55, right? That is support. It's a specific price where buyers come in. However, a demand is an area of price, just like I drew here. It's an area where price could potentially touch, right? And buyers can come in to fill up an imbalance when there's an imbalance, right? And we noticed here that this was an imbalance at one point. Price came back down to fill this imbalance all the way, and it came back to this area here and you see people, buying here. And you can see these shadows here, this lower shadow, aka the wicks, right? People, it did not, it did not, it touched 33.55, but also it came back down all the way to the low, which is 33.53, right? So it's a range of price. So it came back down It pushed price down all the way to 33.53, right? Within the area, within the zone, 33.54. So people were buying at 33.53, 33.54, 33.55. So it's a range. It's a range. So that is a demand zone, right? Where there's buyers coming in and buying at various prices. But a support, it's it's a specific price, such as 32.55, which is a key level, right? So that is a difference. And vice versa with supply. It's the same concept. All right. So support, it's a specific price at a key level, right? And without the knowledge of having an imbalance. Okay. Supply, however, or I'm sorry, demand, however, it's a variety of price, right? Of prices that buyers come in and they execute where there's an imbalance or yeah, where there's an imbalance. Okay, so that is the difference. And so that way you guys can take notes and jot that down. You guys can also rewatch this video to learn more. And the more I do these technicals, the more I break down these charts, I'll remind you guys. You know, if I have to repeat myself, then be it, because like that's how I learn. You know, it's through repetition, it's through memorizing, it's through repetition and doing it all over again. And it has to be second nature. It has to be a habit, right, of knowing this information. So, and right now, gold retested 32.55, went up to 32.60, which is another key level. And now you see how market reacted here as well. Market's reacting around this price, 33.60. So this could be considered a resistance, right? A resistance, um, and supply can be, this zone here. Boom. Now it's pushing price down. We may see a push down all the way to 32.55 again. But yeah, this was a move this morning, right? Was at around 33.55. So for my people that caught this move, man, you're in profits and you could have caught like 100 and 150 pips, right? It hit 33.70. So that's a total of 150 pips to the upside. So if I were to, read if I were to enter here, I would have if I were to start over and re-enter, I would have entered right here, placed my long position here, rather move up all the way to 33.70. My stop loss is 50 pips. That's my sweet spot. So $5 below the entry price. I would have caught the move there. I'm looking at the 5-minute chart. If you want to be exact, you can hit settings and modify the long position. 32.55 is entry price. 33.70 is the profit level. And stop loss is 33.50. Boom. Just want to make sure I'm sharing this. Hold on. Okay. All right, cool. So this would have been the setup right here. This could have been a setup, but it's all good. There's always another opportunity. So this is the setup here that resulted 50 pips, man. So it's a 1 to 3, risking 1% to gain 3%. So if you had an account of, let's say, $100, right? You're risking 1% of that, $10. Or actually, let me actually do the math here. I like to use my calculator. Yeah, $10 you're risking to gain $30, right? So you're risking $10 to gain $30. So that is the potential of this setup right here, right? And just imagine with a higher account balance how much you can risk. And the tighter the stop loss, the greater the profits, right? The tighter the stop loss it is, the greater the profits. Or if you want to have the sweet spot for me is 50 pips, but obviously with a tighter stop loss, with a higher account balance, you'll gain, more profits. And but you work your way up to that level, right? You want to work your way up, little by little, and know your risk tolerance, know your what works for you, based on your plan. So for me, this could have been it right here, man. And but yeah, and you guys can see here we have a candle confirmation, right? So we have this what is this doji, this morning doji star. Actually, I'm looking at the candlestick patterns here. Let me see. Could be yeah, it's a morning star or a bullish abandoned baby. A bullish abandoned baby. These names are so funny how they named this. But yeah, this could be a yeah, this is a bullish abandoned baby. Two. Yeah. Yeah, you got the triple candle patterns. So when you see this, when you see this formation, it is a yeah, it is a bullish abandoned baby. That's the name of this candlestick pattern recognition. So when you see something like this, it's gonna go bull. It's gonna go bullish, right? And um and when I saw this, I was like, okay, well, let me enter at 32.65 since it's gonna continue to the upside, right? And that's why I entered here at 32.65 because I saw this candlestick confirmation, right? And but obviously, anything can happen in trading, anything can happen. You don't have control of what the markets will do. But at least you gathered some information, right? At least you gathered some confirmation. And I was confident. I was like, yo, let me enter this buy at 32.65. It's gonna continue up. And it hit 32.70, it hit my TP1. But then it came back down, right? And I moved my stop loss at 32.60. And once it hit TP, I moved my stop loss to entry here at 32.65. I had my stop loss set up at 32.60. I moved it to 32.65 and it came back down and I hit break even on my first try. So, but it's all good. But yeah, this was a move right here that could have, it would have gotten you 150 pips, entered at 32.55. TP1, 3360, TP2, 3365, TP3, 3370. Stop loss at 3250. And when you're up by at least 15 pips in profit, it's good to move your stop loss to break even when you're above at least 15 pips in profit. And this is for gold, by the way. This is concerning gold, right? With gold, the number of pips work differently compared to Forex. Um, and so, but the concept is the same, right? When you're above at least 15 pips in profit, move your stop loss to break even, right? And when you hit TP1, you can move your stop loss to break even, or you can catch some partials, right? And every 15 pips, you want to move your stop loss every 15 pips in profit. You want to move it, and when it hits TP2, right, you move your stop loss to the TP1 price at 36.5, and then when it hits TP3, boom, the trade is done, right? You also don't want to be greedy. You don't want to be greedy to the point where you don't set up a stop loss, right? Because you want to catch as much profits and you don't want to hit stop loss or hit break even or whatever. Um, Stick to your trading plan, stick to your risk management rules. Do not be greedy. Do not be greedy. Once you hit profits, you're done. Stop trading. All right. At least you got profits, right? You will never go broke taking profits. So when it hits all your TPs, stop trading. You don't have to enter again, right? You're done for the day. You hit your percentage for the day. So why enter for another trade when you see another setup? Why risk another trade when you're already in profits? What if you lose that trade? What if you lose that second trade? You just never know. That has happened to me so many times. Man, I remember I would catch 100, 150 plus pips in profit, and then I'll enter for another opportunity because I saw another good setup where I was like, man, I'm gonna enter this trade again. You know, it looks good. I'm gonna make more money. I was being greedy. I was just being greedy, so I entered for another trade, and I lost all the profits that I made on the first trade. I lost it. I was like, man. Now I went back to break even, or I went back, even lost some profits. So it just, I highly recommend you guys, to stick to your trading plan, to your risk management rules, and just be disciplined. All right, be disciplined. Do not be greedy when it comes down to the markets because the markets can humble you. You can be liquidated. You can be wiped out, and it's not a good feeling. Because he spent so much time analyzing, so much time just, focus and so much time analyzing and just time into the markets where, like you don't want to sabotage yourself and end up losing, right? After all the work that you put in. You don't want to put in all that work for nothing. So you want to make it worth it and you want to be diligent with your trading, right? Very diligent. So but anyways, this was a setup this morning, and right now market is slowing down, right? And it's around this price level. The big move happened earlier this morning, and this was a 150 pip move. Market came down. You could have caught the sell there. You could have caught the sell here going down, but you don't want to go against the market, right? We are in a buy. If you look at the meter here, we are in a buy mode. Buy, buy, buy. Buyers are taking over. Um, so you don't want to go against the trend. You want to go with the trend, right? You want to go in the direction of the market. Right now it's going up, and we have a reset. I was going to say reset, a correction. Uh, we have retracement going on here, here, here. But that is part of the market. It is part of price. It's just part of price action, right? This is all these corrections here, these retracements. It's normal. So when you see these corrections happening, these retracements, it is completely normal, right? It does not mean that price is going to continue down. It may continue down, who knows? But when you're on a buy momentum, you will expect to have these corrections, but it does not necessarily mean that it's going to go to the downside or there's going to be a market direction, a market change direction, right? Because we know the overall trend is to the upside. And we're going to expect these pullbacks, but it's just temporarily. The overall trend is to the upside. What goes up must come down. What must come down goes up. So it's just part of the cycle. And we'll see what happens. And we also have news tomorrow, so we'll see more momentum. We'll see more movement going on. Not forgetting that we have this imbalance candle right here, this huge bullish candle imbalance here. This is all liquidity. So we may see price shooting back down. We may see price shooting back down to fill this gap before the move back up. It could be tomorrow, it could be next week, who knows, right? Um, but just expect that gap to be filled. So it may happen soon. But we also have other liquidity happening up here as well. We have all this liquidity here, so price could continue up to fill this before the push down. So it's very important to continue to monitor the market, analyze it, and gather as much confirmation. So we pretty much covered the steps here, right? We went over, where are my steps? Did I delete them? Oh, yeah, I deleted my steps. So the 7 steps that I had, if you guys can remember the 7 steps of playbook, I don't know what happened. I think I deleted them. Uh, I don't know what happened. I may have deleted it by accident. But I had the steps here. We saw the first step, market direction is going up. Second step, supply and demand. So we have our demand here. Third step, break of structure. It broke above structure, came back to retest, right? And then fourth step, liquidity. We have liquidity here, right? Liquidity, wiped out liquidity, came back down. We have the fifth step, which is the time, right? At what time this happened? Right at 6:30, right at New York Open, this bullish move happened. And then the sixth step is a confirmation candle, right? This is the confirmation candle here. I just explained it earlier. This is the bullish abandoned baby. And then the last step, which is a 15-minute market execution. Boom, would have entered here. Bah. So, and I'm still refining the strategy. I'm still working through it. And but it's so far is working well. And especially for gold, it's working well. And but just keep in mind it may be subject to change. But anyways, guys, I gotta go here. I appreciate you guys for tuning in. I'll see you guys next week. for Chart Work with Carlos. And please like and subscribe. And thank you so much for listening in. God bless.